Hi, this is Roger Conrad. I'm co-editor of MLP Profits with Elliott Gue. What I want to talk about today is energy prices. We have three portfolios in MLP Profits. One is the conservative holdings, and these are primarily fee-based MLPs. In other words, master limited partnerships that generate the majority of their income from fees that don't really depend so much upon energy prices, more energy price activity. Their clients are very, very solid, some of the larger names in the industry, so in other words, they're very, very good payers. They don't have to worry about bad debt, those types of things. And as they build assets, the money just continues to flow in. So this is a very, very profitable business, continues to be, and will be for the foreseeable future. When we get up to the growth holdings and the aggressive holdings, however, we're taking a little bit more risk with energy prices. We're very, very bullish on energy prices going forward. We believe that when the economy cycles out of this recession, demand will rebound to previous levels, probably even greater levels. All these types of fuels, which right now are in very heavy supply and demand is lagging behind, will be in much greater demand once again. Supplies will dry up and prices will go higher. Producers will make quite a bit more money, and then that, of course, will benefit our MLPs. The growth MLPs, to a lesser extent because they're anchored by fee-based assets. The aggressive holdings to a larger extent, although many of those note that they have done a lot of hedging, or in other words, selling their output forward at very preferential prices. So they're less exposed to the ups and downs of the daily market in oil and gas than one might suppose. But all these types of companies, we believe, will benefit as energy prices rise going forward. Now, what we've seen, though, in the near term is quite a bit of doubt. Bull markets climb a wall of worry, and that makes us very happy in one sense, in that we think the trend has a long way to run as long as there's so many pessimists, so many bears on energy out there. But it does make for some very volatile near-term markets. It does make for some very can be very dramatic ups and downs in the prices of some of these MLPs we remember. The IEA, the International Energy Agency, is apparently coming out with a report that was in Wall Street Journal this week that they're going to posit that demand is going to rise a lot more slowly than they had envisioned before. And that, of course, could be construed as bearish for energy. I mean, it's a very widely watched survey, changes very frequently, and I would caution anyone against really putting too much store in what those projections are, as they can be wildly different depending on the market environment. But they are widely watched. They are people pay attention to them that run large amounts of money, so it could have an effect on the market. What I would really want to call people's attention to, though, is another item, and this actually appeared in the same page of the same date of the Wall Street Journal. But down below the big story, which was about IEA, was a story about China. A Chinese company taking another big stake in oil and in natural resources. Now, there's something of a disconnect here, I think, between here you have these IEA projections that the developed world really pays so much attention to, but here you have the world's rapidly becoming the world's biggest consumer of fossil fuels, still out there locking down reserves, trying to get their hands on as much production as they can get their hands on, because they know they're going to be using it going forward. So pretty much at odds with what the IEA is saying, because if that, of course, if the Chinese were buying what the IEA is selling there, they would not be out there buying reserves. So I would just caution investors to take a look at these straws in the wind. Don't pay so much attention to the so-called experts on where energy prices are going. We've been through a very, very powerful downturn in energy over the past, really beginning middle of last year. It reversed to some extent beginning in early March, pretty much moving in lockstep with the rest of the market, which has been moving in lockstep again with prospects for economic growth. But we're still well below where we were in mid-2008. And at the same time, we've seen a lot of supply destruction. One of the big stories in this earnings season has been that large inventories, and that some of the players out there, particularly some of the smaller ones, have been finding new ways to produce and new fields, new increases of production. Well, that's true, but on the other hand, there have been lots and lots of projects that have been canceled across the board. So before anyone gets too excited, that you know, we're going to be awash in oil and gas and that prices are heading for another decline. Again, keep in mind that there are major players out there in the world still locking down new reserves. And in any case, with our MLP profits plays, they're probably some of the lowest risk ways of playing this energy price movement. Like I said, even our aggressive holdings tend to be hedged, so the daily ups and downs don't really have that much impact. The growth holdings are hedged by the fact that most of their income comes from fee-based businesses that don't really aren't really that much affected by oil and gas. So we may see some near-term volatility in the price of some of these things, but we would urge you to continue to adhere to our buy targets, and I think you're going to come out, you're going to be very, very happy long-term, not just for the high income, and many of these are increasing dividends, and we've seen some very strong earnings come through so far, but also from the point of view of capital gains, which I think we will see going forward as they're able to grow faster, and particularly, again, those that are leveraged to energy prices in some way. So that's all I have to say today. Thanks for tuning in. I'll look forward to chatting with you next time.